Well, this is a brilliant point because if you see the year 2014, you had a lot of uncertainty in terms of the number of rate cuts. We were going for a policy mistake, recession, etc. 3 cuts, 5 cuts, then 0 cuts. There was a point where we were thinking the Fed would have to cut because of the strength of the economy. So one of the things I think is interesting is the economic volatility of the data. We tend to forget that these are statistics and they get revised up and down. And what we notice is a high sensitivity to markets on data releases. But what we should be looking at is the trend. And the trend is definitely showing the job market slowing down or stabilizing in the US. And therefore, this should lead to lower service price inflation. And if you remember, this is the bit that is the sticky component of the CPI. Absolutely. Whereas goods inflation is already back down to 0 or even lower.
Ergo, then, that comes to another one of your points, that we are being perhaps too optimistic on inflation or not? Because, I mean, one of the points you were saying is appears beaten, but some data suggests it may spike again in services, for example.
Yes, this is the big known unknown. But the base case scenario, if you look at forecast, we see inflation in the US down to 2.2 next year, at 2.2, 2.3, and in the Eurozone at 1.9. So I think central banks are now pretty much done with the fight against inflation, and they are essentially focused on the fight for growth. If you remember, the Fed has a dual mandate, which is maximizing employment and stabilizing prices. And this is why we think that they are on a mission to bring down interest rate back to the neutral rate, which is the level that is not stimulating but not constraining the economic activity.
To me, economics is like a good cocktail. You put in certain ingredients and you put in the right measurements, you get a certain outcome. So as we talk about a certain outcome here now, as you see it, the extra ingredient we're putting in is Trump. Does he change the goods narrative on inflation? Does he change the services narrative on pressures as we see businesses get more active on investment and more animal spirits in the US business environment? So does that all change with Trump?
Well, this is the key point, and I think the new mega trend over the next 4 years could be what can be called...
As opposed to the MAGA trend.
The MAGA trend, I was about to say.
Oh, were you there? Sorry, did I just steal your punchline really badly? Let's start again. So what is the new mega trend?
The MAGA
got
trend.
It, yeah.
No, I mean, I think if you look at how investors were positioned for a red sweep, they pretty much have put on long US equities, long small cap, long dollar, higher bond yield, and these are the trends that reasserted themselves. The question today is whether a lot of this is already priced or not, because there's been a lot of announcement, but the key uncertainty is execution and timing. So in our opinion, we think this will continue over the next medium term because the economy has been pretty resilient. And if you remember, the original sin, so to speak, was this $25 trillion of fiscal and monetary stimulus that was injected in the world economy to save human lives. This is backed in COVID, and we still see the effect of that sort of kinetic energy producing massive corporate earnings through greedflation and also excess savings that is now being used through consumption. So we are into an interesting sort of mid-cycle phase of the economic cycle.